So welcome to Technical Analysis from Tradespotting for June the 24th, Thursday, what we'd like to see in price action today. If we start on the daily time frame, stretch things out a bit so you can see what's happening. We came up, put in a higher high than this previous one from St. Patrick's Day, early March. And we also confirmed, as we had suspected, that this may be forming a cup and handles. We subsequently got the retrace that we anticipated, and if we draw that out with the Fibonacci retrace, we can see that coming from 340s down to the high 190s, that we've got this Fibonacci sequence which may dictate where prices can go. At least it tells us what we'd like to see happen in terms of bullish price action. And what that would constitute on the most basic level on this daily time frame is an open and a close above the 236 on this Fibonacci retrace, which comes in at around 228, 229.15, you call it clean. If we can do that, an open and a close, so bearing in mind we're today opening below it, that would take at least 2 days to do so. That doesn't mean it needs to do that, but if it does do that, it could just be that tomorrow and today we see some very, very bullish moves and prices go on up higher. But if we can achieve that close, then it may be that the next targets we're aiming for is up at $278, give or take $5, which would be a 618 retrace up to the golden pocket on this Fibonacci. That's typical of this kind of price action. It's what we'd like to see, and it would put even more weight to our thesis that this is a cup and handle, something that we've been talking about on this channel repeatedly since like mid to late April. So that's what you're looking at on the daily time frame. If you drop down to the 4 hour and we zoom into things, and you can see that we're coming out of this, perhaps this is a channel. We had it drawn earlier as a wedge, and we broke out of that, but wedges often become channels, and channels often can become wedges. So drawing a measured move off it doesn't necessarily get you any sort of liability, but this is what people will be thinking. And a breakout would take you up around to the 382, and that's like the 244 level. So 244 may be an area of congestion on our journey upwards, and at that point there would be people considering is this going to continue? How does this move go? Because anything that goes beyond the 382, especially if it then with velocity goes beyond the 0.5, you don't necessarily top off at the 618. It could be even more strength to that move. So we'll see how that goes. And does that all mean that that's going to happen by the end of this week? Not necessarily, but things are all aligned. And if we do then drop down and look at these indicators, it will give us an indication of the trend, the volatility, the volume and the momentum. We can see that RSI, which covers a couple of those, is now above its own exponential moving average as shown on Rocky Outcrop's RSI. We've maintained this demand line, let's call it. It's where the RSI gets picked up again on the 4 hour. That's a strong trend. Now it's accumulated above the bearish control zone. It's not even managed to drop back into the oversold zone, and that's typical of very bullish price action, especially in response to what might have been some doubt in some people's minds because of the touch of bearish divergence we put up at our most recent highs. But that was a part of a trending move, so in and of itself you can't take that bearishness as very far, especially when this is the reaction. So that's what we're looking at, and we've managed to put in that area of consolidation, and if we can do this closing up and above here, the people would consider this to be a very strong level of support going forward. It's also peaks from this trough that we dropped into, and subsequent to that it was where an open and close happened in our initial thrust up, and it's only a hop, skip and a jump to our March highs again. So this is very bullish, and if you look at that more closely on Rocky Outcrop's DMI, with the blue being the DI minus, the green being the DI plus, and the change in colours here, that's your ADX. You want to see the positive trend picking up. We've seen that. Ideally it would come with a positive slope on the DMI. The most bullish price action that this formation that this can come from is when your ADX has dropped right into the blue steel colour. And has then gone through red, orange, and into blue, and you can see that when that is above 38, things are trending, they're really, really strong. So on that note, and sticking with the DMI, drop down to the hourly, and you can see here's that formation more or less playing out. It hasn't got the blue steel at the bottom, it's come back into its positive blue. You can see that it's above the center. See that the negative trend is pretty much dying off. It's all in time with like the positive trend gaining dominance. That's come with a cross, a very positive one, as the ADX turned up. This is very bullish price action. If we drop down to the 15 minutes, sticking with this, you can see there's confirmation of it. We're above the 38. We're doing everything we talked about we'd like to see on the higher time frames, and I fully expect that to be the picture that we see evolving through the 4 hour and up to the daily, and as price action increases in strength and velocity. I expect to see that being painted out on the indicator, which is designed to measure those exact things. So there you go, there's the line that it's looking for, that's the trend that the DMI is following. I expect to see that picking up with lots of retraces straight away. But then we go down to price action on the 15 minutes and we'll talk about what might happen. And here's this area coming in for those of us who are patient and thinking about the basis line, thinking about retest of this formation. If you've watched my video on how to trade reversals and breakouts, then you'll have been hesitant, to say the least, to get in at these areas, and will have been looking for these sort of retests. Those are the ones we covered in at around 217 to 218, and then down again. Perhaps you're getting in at around 212, 213. I wouldn't suggest that's necessarily likely, because this is very typical of a very bullish move. This retest is as likely as good as you're going to get. So today, an entry anywhere around 218, 219 is very positive. And then whether again you're even going to get that's hard to say, right? Price actions open bullishly, and these targets we've only even crossed those prices for seconds today. So the first time we touch it, I expect to be a bullish accumulation. And we'll see how price action goes on. The targets I've identified so that we're looking to aim above are obviously that 236 and the 228, 229, open and closing above there. Even on 15 minutes, 30 minutes, if we're doing it consecutively upon each target, prices could just get kicked up. And so your targets above you're looking at are that 228, 229, then above up at 244, and then again up at 267. And if you break 267 straight up to 342 and 342, 343, close that on a weekly, it could be enough to kickstart the MOAS, because if you go across and look at the Wyckoff accumulation as denoted on the point and figure charts, which is where that's best done, you can see that we're nearly breaking our all-time highs. That's the way this is measured. It's got a completely different inflection, the way you measure these things, and that point, banana error, is really ready to take off. So that's your morning update, and feel free to tune in to Tradespotting, where I'll be doing live streams from market open to market close every day, focused on GME, because I'm a GME man. See you there.